Hello, my name's Ryan Littlestone from forexflow.live. In this video we're going to take another look at the Aussie dollar, pair that I've been shorting for quite some time now, up in the 69s and on various breaks on the way down to these lows around about 66. Now what we're finding now is that we've just found a bit of support coming in around the big figure. It's a bit of a consolidation period at the moment. We had the breakdown under some of the bigger levels below. There was 66, 70, 80 area. That was one big level, the prior lows that we'd seen going back to last year and such. And we got a break of that, but it hasn't really followed through. Now, if we look at the monthly chart, we can see that last line of support, if you like, there. And we've pretty much got a big gap down, as I say, looking at this monthly chart. There's not really a lot of tech underneath it. It's all more longer term stuff. So, you know, pretty much until the low 62, low 63s, maybe just under the 63s down to 62.80, we start hitting some of those lows going back to the sort of 2007, 2008. So what we're looking at now here is whether we get a continuation of this bearish move lower, or whether we do continue to find support here, maybe build stronger support here, and we get some sort of retracement. Now, if we take a closer look, we move to the 4-hour chart, we can see the picture in a little bit more detail. We can see that the lows are starting to build, and we're starting to see this support build against this sort of 65, 80, 85 area. So that's becoming the key marker for the downside. We need to break that to see a sustained push lower, to have another run lower. But on the top side, as I say, we're still finding we're up and down over this 66 level, with 66.20 being possibly the key number above. So that gives us a pretty tight range to play in, sort of 40, 45, 50 pips to play in. So really the marker for direction here is whether we get above that 66.20 area, or whether we get below this 65.80 area. That's a simplistic way to look at it when you're trading this. So you've got a potential to go to trade in between those edges, or even go with a break either way. I'm more inclined to look at selling any rallies and staying on the short side in my position. So what I'll be looking for is potentially, if we see this level below at 65.80 break, that's potentially a break trade I'm looking to get in on. We'll see what the price action is like. If we get above this 66.20 area, then we're looking at a longer term trend line that you can see from the monthly chart. But also we've got this downtrend that's coming all the way from December 2019. And the moving averages there, the 100 and the 55 4-hourly there. So that's going to be an area particularly that needs focusing on. That's potentially where, if we do get a decent move higher, that's where it's going to run into trouble. If we see resistance coming in there, that again could be a signal to get back into shorts, or look at the short side again for another move lower. So as I say, pretty much we're in a mini consolidation phase here at the moment. We've got the RBA next week. There's not much expectations for that. The odds on rates staying unchanged at 0.75% is 95%. So it's pretty low expectations here, but we need to see whether the virus concerns and the wildfire concerns are playing out a bit more in the RBA's mind, whether that's going to influence policy or not. They didn't really touch on it in the last meeting, so there's a case to say they might not do so again. That might give the Aussie a little bit of a boost. But that's maybe going to be the main focus for traders at the moment. But as I say, look at the tight ranges down here, look at the wider ranges, and you can trade them accordingly. So that's my analysis for the Aussie dollar, and I wish you luck with your trading this week.